So, something pretty dramatic just happened in the financial world. You might have heard about it. Gold, that ancient metal that's been a store of value for literally thousands of years, has been on an absolute tear, smashing records and leaving a lot of investors wondering, what on earth does this all mean? Today, we're going to unpack that story. We'll look at gold's incredible surge and ask the big question. Is this some kind of warning sign for the money in your wallet? Okay, let's dive right in.
Just look at that number, $4,024 an ounce. And November of 2025, gold didn't just break its old records, it completely obliterated them. That's a staggering 47% gain in less than a year. A price surge this fast, we haven't seen anything like it since the chaos and stagflation of the 1970s. This isn't just a market move, folks. It's a signal, and it raises a much deeper and honestly, a much more unsettling question. Is this the end of the line for fiat currency? For the dollars and the pounds and the euros that we all rely on every single day? Well, gold's explosive rise is directly tied to a growing fear about the stability of the entire system. It's basically a vote of no confidence in paper money, and we really need to understand why this is happening right now.
Right, so to get to the bottom of this, we first got to understand the forces that are making investors so nervous. And this isn't just something that popped up recently, it's part of this long historical pattern of fear and a flight to safety. It all starts with the very nature of our money.
The money we use today, it's called fiat currency. Now, unlike the old days, it's not actually backed by a physical pile of gold sitting in a vault somewhere. Its value comes purely, and I mean purely, from the trust we have in the government that issues it. And, as we're about to see, when that trust starts to get a little shaky, people start looking for an alternative.
Now, what's so interesting about this is the pattern. It's crystal clear. Every single time our fiat system comes under major stress, gold's value just soars. Back in '71, when the US officially cut the dollars tied to gold, that kicked off this whole new era. Then in '79, with inflation totally out of control, people rushed to gold. Same thing in 2008 during the financial meltdown, and again in 2020 with all that massive money printing. Gold was the safe harbor. So 2025 isn't some random event, it's just the latest and maybe the most dramatic chapter in this long story.
So what makes 2025 so special? Well, it's not just one thing. It's a perfect storm of 6 forces all hitting at once. You've got a weakening US dollar, stubborn inflation that's making our cash worth less every day, and all sorts of geopolitical tensions, from trade wars to regional conflicts. At the exact same time, central banks around the world are buying gold like it's going out of style. Regular investors are piling in, and the supply from mines just can't keep up. It's a classic squeeze. Massive demand, tight supply.
And this chart, wow, this just illustrates the core dynamic perfectly. As gold has shot up by 47% this year, the US dollar index, which basically measures its strength against other big currencies, has fallen by over 10%. You see that? They're moving in complete opposite directions. It's like the seesaw. And that inverse relationship is the clearest sign you can get that investors are selling dollars and buying gold as a hedge.
Which brings us to the second part of our investigation, the fate of the US dollar itself. I mean, is it really dying? Well, there's a really powerful global trend that suggests its dominance is being challenged. And it has a name: de-dollarization.
Okay, so let's look at the world's piggy bank. These are the global reserves held by central banks. For decades, the US dollar was the undisputed king, making up almost all of these savings. And as you can see, it's still the biggest piece of the pie at 58%. But look at what's growing. Gold now makes up 22% of reserves. That's up from just 11% back in 2010. Countries are actively, deliberately moving away from the dollar.
And the scale of this shift is just immense. We're talking about the world's central banks buying over 1,000 tons of gold every single year. Countries like China, India, even Poland, they're leading the charge. They are intentionally reducing how much they rely on the US dollar, and they're using gold as this neutral, non-political asset to anchor their financial systems.
But wait, before we declare the dollar dead, let's look at the other side of the argument. Because on one hand, history shows that the average fiat currency only lasts about 27 years before hitting some kind of major crisis. The dollar, at 54 years since leaving the gold standard, yeah, you could say it's on borrowed time. But on the other hand, its resilience is undeniable. I mean, 90% of global trade is still priced in dollars, and innovations like a potential digital dollar could give it a whole new lease on life. So the crucial point here is, it's not that simple.
Okay, so if the dollar isn't going to collapse tomorrow, but it is under a lot of pressure, what does the future of money actually look like?
Well, the evidence seems to point not to some apocalypse, but to a fundamental evolution of the system we've known for the last 50 years.
So here's the verdict. Gold isn't coming back to kill the dollar. Instead, what we seem to be witnessing is the emergence of a hybrid, more balanced system. The world is becoming more financially multipolar, which just means it's not all about the US anymore. And in this new world, gold is reemerging as that neutral stabilizer, a financial anchor that exists outside of any single country's control.
And hey, gold isn't the only thing reshaping this landscape. We've also got to consider the new players that are coming from the world of technology. Over 130 countries right now are developing central bank digital currencies, or CBDCs, basically digital versions of their own money. At the same time, you've got assets like Bitcoin attracting investors who are looking for a digital gold, a kind of modern hedge against the old system. So the future of money? It's clearly a complex mix of old, new, and reinvented assets.
All right, so we've covered the big global macro picture, but what does this shift from a dollar-centric world to a more hybrid system, what does it actually mean for your own money, for your investment strategy? The legendary investor Ray Dalio put it perfectly. He said, "Cash is trash in inflation's gale." Think about that. In an environment where governments are printing money and the value of that cash is steadily eroding, just holding on to it means you're losing purchasing power. You're literally getting poorer without spending a dime. That's the core problem we all need to solve.
So, the key takeaway from all this is simple. Diversify ruthlessly. The historic rise of gold in 2025 isn't a signal to bet the farm on some apocalypse. No, it's a loud and clear message that the financial world is changing. Gold's role in a modern portfolio is as a hedge. It's financial insurance. It's there to fortify your wealth against uncertainty and the slow decay of fiat money, not as some lottery ticket on a total collapse.
Look, the era of just simply trusting one currency or one government is evolving. The system is becoming more complex, more distributed, and this brings us to the final crucial question that this whole analysis has been leading to, a question you should probably ask yourself. In this new era of money, what's your hedge?